Hi, good evening, everybody. Welcome to our third webinar. This evening's talk is entitled Enterprise Resilience, very topical at this time. We are lucky today. We have George Koshi from EY with us, and he's going to be interviewed by Balraj Panu. Again, please write your questions in the chat, and we will forward those to Balraj and to George. So the reason why we invited George is because it was Balraj actually who shared one of the EY reports to us. They've been producing regular reports on the state of the Malaysian economy and advice and strategies and analysis for businesses. And we found them really interesting, informative, and we thought it would be good to hear from George himself on some of the work that they're doing and some of their conclusions. So a little bit about George himself. I've just heard that he's actually a hockey star as well, so very multi-talented. George is a partner at EY, and he's also head of the transaction advisory services in Malaysia. He's got more than 35 years experience in specializing in financial consultancy and auditing, and advising clients in both the public and the private sectors. He particularly specializes in fundraising and mergers and acquisitions, so aptly qualified to come talk to us today on enterprise resilience. A little bit about your moderator, Balraj Panu. He studied law at Oxford, and he's a past vice president of the Oxford and Cambridge Society in Malaysia, and now he sits on our EXCO committee. He was running the entertainment dining concept Le Petit Chef in the region, but he put this in hibernation, obviously, because of the current circumstances. He started a business, which is post-COVID business on deep cleaning, and he's also helping with the COVID-19 monitoring and tracking app as part of an existing smart city platform. So a real entrepreneur, so ideally placed to be asking questions about enterprise resilience and to talk to George Koshi. So I pass you over to Balraj and George. Thank you.
Good afternoon, everybody. Lovely to have you here today. To all of our listeners who are starting the fasting month, Ramadan Kareem. Hope everybody has a good fasting session. We are very grateful here to have George. The direction for the talk today is that although we've heard a lot about the government with COVID, we've heard a lot from some of the other society segments, perhaps the SMEs, we really haven't had too much of a chance to look at the corporate Malaysia perspective. So we would like to focus this talk and to pick George's brain onto looking at things from the lens of corporate Malaysia, sort of putting ourselves in the shoe of corporate Malaysia and seeing what's happening in the landscape today. Of course, George is he's been involved with he's the lead in transaction services. He's not an economist, so perhaps today's questions shouldn't veer too far on the economy, but he's deeply qualified to maybe talk about corporate Malaysia, considering that his last 3 deals that he did, I understand, are the debt restructuring of an oil and gas company, very topical with the prices of oil at the moment. He has an ongoing internal reorganization of a listed company in line with future-proofing their business. Again, very topical. And also he's looking at the financial pain points of companies to see whether they should be growing things, merging, acquiring, and so on. So very topical. Before we get into the talk proper, please allow me to suggest the framework a bit more. The talk is going to be, we're going to go through some of the releases that George has taken the lead on. He's going to share with us on that. And then we are going to have some prepared questions, and then for about 40 minutes. And then the last 20 minutes, we really want you to have a chance to ask all your questions and get your insights. We would love for you to comment, to question, to discuss among yourselves, even on YouTube channels. We deeply encourage that. We quite enjoy that. And what's going to happen is the more energy we see on a certain topic, then that's the topic that Emma is going to propose to George and I about, on the questions. So please feel free to share your thoughts. We really enjoy that. So to get the ball moving, George, you've led fantastic releases. The first one was entitled Economic Impact of COVID-19, a Malaysian Context. And the second one was Distress Corp, Navigating Corporate Malaysia Financial Risk Amid COVID-19. Could you share with us a little bit on this, please?
Yep. So thanks, Balraj, and thanks, Emma, for the kind words. I think, in so far as the first paper that we have sent out or distributed, I think these were the key messages that we had in the first paper. When we look at the economic situation in 2020, it looks grim, but we expect it to bounce back in 2021. This may be the worst economic downturn since the Great Depression. But through uncertainties, although it's uncertain at the moment, we expect a bounce back in 2021, and this is in line with all the research that has, including IMF and so forth. Though all sectors are affected, the impact varies considerably by industry and company positioning. There are the strong sectors are those in consumer tech, e-commerce, digital media might come out even stronger, and we would expect them to do some M&A moving forward. There are some sectors that would need to be transformed. The pandemic will affect the operating model for many, even when demand is restored. The automotive players will see deferred consumption as well as issues in so far as global supply chain. The commercial real estate will be affected unevenly, with commercial retail and REITs facing the most headwind. FMCG food producers benefiting from temporary increase in packaged food consumption. Last mile logistics profit pool allocation might shift in favor with demand surge. The sectors that will need to be reshaped, obviously, are the oil and gas sector, who has been hit with a double whammy of sinking demand and price war. The physical retail has been facing disruption, and we expect the shift to e-commerce to accelerate. The sectors that are really unknown are travel and tourism. But I think all firms must take action now and next to reposition themselves beyond. The winners and losers can shift out of this crisis easily. Insofar as a resilient part of it, I think when we looked at the paper, we identified four main areas: putting people first, protecting business continuity, build and secure liquidity, and of course, it is important for you to engage stakeholders. Uh, Insofar as people were concerned, people are the key assets for any organization, and just like you and me undergo high stress when dealing with fear, anxiety, and ambiguity, and uncertainty given to the extent of COVID-19 on their lives. Business continuity, I think we see and we hear that there will be major supply chain network disruptions. Business will lose clarity on demands, and buying behaviors will shift. Insofar as finance, I think liquidity is key in everybody's minds, and we see a lot of corporate Malaysia having to restructure their financial positions.
Okay,
Insofar as
George. Yeah, so George, that is like a mouthful, George. You have to help us out. I have to sort of pick a bit of what you were saying, because you've packed so much nuggets of wisdom in there. I have to sort of slow you down. So George, can I just pick up again? You identified certain sectors that were going to be on the up, certain sectors that need to be transformed, and certain sectors that are challenged. Could you just run us by that again? Which ones you think was the up and up, the transform, and which one are challenged?
the ones that are up will be the ones that are in e-commerce and digital media. They are strong and they are the in thing currently. The ones that need to be transformed are the automotive players, because consumption will be deferred. Real estate, with this change of mindset and work from home and not really going to malls and so forth, will be affected. FMCG food producers are benefiting now with the increased consumption. Logistics will also need to change insofar as the distribution. The sectors that needs to be reshaped are the oil and gas entities. I think they are already looking at moving into other businesses, but
Wow.
those entities will need to consider the oil price crash, and also consider the price war that's going on. Physical retail, will need to reinvent themselves. I think currently with this COVID, a lot of space is being used for other things. The sectors that are really badly hit and really having a shutdown is airlines, aviation, and tourism.
Wow, understand. If George, if I can help me sort of helicopter a bit higher, and we look at it from a broader perspective, some people are saying, are we looking at a V-shaped return? Are we looking at a U-shaped sort of comeback, or are we looking at an L? What are your thoughts on this? And what are the drivers? What would help us go from an L to a U or a V, please? What are your thoughts on the bigger picture?
I think we need to look at the situation in the past. I think the previous financial crisis was cyclical in nature compared to the current disruptive one. Historically, pandemics like this and pandemics, and this pandemic is not like one is just that it's happened now. There are a lot in history. There has been a lot of pandemics before: cholera, bubonic plague, smallpox, and so forth. Most previous pandemics have resulted in a V-shaped recovery, with activity picking up strongly once the initial wave of illnesses is resolved. And that is also the current assumption, that we should expect a V-shaped recovery. Drivers that will lead to different parts are characteristics of the virus, success of public health measures, impact of government and Bank Negara stimulus packages and measures put into place, consumer behavior, business response, and fear of contagion. I think we need to look at it, and that's a clear indication of why the MCO has been extended by a further 2 weeks, and even the Honourable Prime Minister talked about probably further extension. We will wait and see. I think it's like, if we don't curb this issue now, things could get, the V may become an L or a U. Malaysia, being a vital part of global production supply chain, has become a very open economy, and all important trading nations are affected. The whole coronavirus induced economic crisis cannot be recovered with just only stimulus packages. Businesses need to open. Corporate Malaysia needs to participate in this, and corporate Malaysia needs to drive the economy. To fully recover, Malaysia needs to open its economy and look towards the other nations. There is really no point in Malaysia just opening its economy and the remaining economies of the world are closed. We can't be trading with ourselves. We have been global exporter of a lot of stuff.
Understand. So, sorry, just please allow me to pick up on this. So you feel that the drivers that will determine the economy, whether being a V or a U or an L, would be the virus characteristics, health actions, government, including Bank Negara, consumer behavior, the fear of the contagion, and then corporate Malaysia to drive it. But also you need the international partners to participate. Is that how you see it?
Yes, Balraj, that's correct.
Okay. And how do you think we are doing at the moment? How is your feeling?
I think if we look at the, if you're looking at the number of new cases coming out and compared to the recovery, I think we're doing a fairly decent job, and a lot of positive sentiments. I think everybody's like, when we first started with this, everybody's super depressed, but I think we understand the action, and I think there is really no need to rush back and then having to go back into a lockdown in a couple of months. That will be disastrous to the economy.
Understand. So you suggesting a cautious approach, but then hope for a V-shaped return after that.
Yep.
Perfect. Great. Can I just pick up on one of these drivers just a little bit, because it's been discussed so heavily, and it'll be great to get your point. So the government has pumped in one of the biggest stimulus measures, packages that we've ever seen. But if we sit on the chair of of Corporate Malaysia, what does this really mean? The stimulus, when we say 260 billion, it's not really that the government is giving this money out, right? I mean, there was some of it is coming from banks in terms of the interest it will be deferred and so on. Some is coming from EPF. So if I was to simplify, if I'm Corporate Malaysia, where am I getting the stimulus from? Am I getting $1 from interest? Am I getting $2 for my staff? And how does that play out? Government incentives for Corporate Malaysia.
I think government incentives for Corporate Malaysia really is looking at a balance of people's lives at the moment, and really trying to put money in the hands of people, so that they will be able to sustain their own livelihood, to be able to spend, to be able to take care of themselves. This lockdown affects Corporate Malaysia, affects individuals like you and me, more so the individuals who really doesn't have an earning capacity. So I think we need to look at, is this decision that the government has made is unique to Malaysia? I don't think so. I think when we look at all decisions that the world, the governments of the world has made, everybody has chosen life over economy, and I think that's the way. Insofar as Corporate Malaysia is concerned, of course, whether it's cash that they have gotten, I think what most of the government stimulus package is basically allowing them to defer some of their, EPF payments, moratoriums, to be able to defer the loans and defer their interest payments, and this deferment, could range from to 6 months and so. So which MCO should have been lifted and should have allowed them to generate, recommence operations and recommence their business. So I think that's the only take for Corporate Malaysia, giving them the opportunity to ask for rental discounts, giving them an opportunity not to make payments, and even maybe deferring tax payments and so forth, so to ease their cash flow burdens, because they are not currently not generating revenue.
Understand. And the $1 million question here, perhaps, George, would be: is it sufficient? Is this enough to help them get back onto their feet when the time comes?
I think I don't think there is a real answer to that question. The government continues to look at the situation, and I think, as the situation progresses, I would believe that there could be further stimulus packages being extended. I think, it's not, we can't be, getting our balance sheet and our cash flows in a knot here. I think we need to manage within the cash that we have, and look at what is priority. So I don't think it's the end. Maybe as the economy is open, and then specific needs, there are entities that have approached the government for soft loans and so forth. I think those are not part of the stimulus package. Those are direct discussions that could happen, and that's something that will stimulate the sector and the economy.
Understand. So that's great. Thank you, George. So we talked about sustainability of Corporate Malaysia, but within Corporate Malaysia, there are a number of stakeholders. There are internal stakeholders, the shareholders, the management, the employees. There are external shareholders, and so on and so forth. So in terms of this sustainability discussion, what do you think of the tension that naturally exists here? In one of your presentations, you very nicely positioned out the different stakeholders and some of their key concerns and how they should be dealt with. But that there is a natural conflict of interest, a tension that exists, and some are arguing now it's a zero-sum game. Someone has to lose for someone else to benefit. How do you see Corporate Malaysia dealing with this? Or because there are some difficult decisions to be made, right?
Yep, I totally agree with you, Balraj. It's not unreasonable to see conflicts, as a zero-sum game requires each stakeholder to give and take. And having the overall best interest of the entity. I think if we approach this on a very self-centered, selfish mode, I think we will have a tough call. If shareholders expect the same amount of dividends as it got pre COVID-19, I think that will add additional strains to its cash flow. Uh, and if banks were to be difficult and foreclose everybody, companies will collapse, people will be unemployed, and economy will be affected. So it has to be a give and take. At the end of the day, I think there I would expect conflicts, and I think the first area that we see, that's where we came up with that second article in the distress situation that we envisage, that the the corporates and the banks would need to engage one another, not wait until the moratorium is over. Engage now, have that conversations, and discuss what can be done. I don't think it is to the best benefit, best interest of the financial institutions to collapse companies, because that's not their business model. The business model is to lend and recover money, and I think that's the give and take that I will see. So every stakeholder, from supply chain, from customers, today, if you were to order food online, groceries online, I'm sure in the past, if somebody tells you that 7 days to wait for it to come, you will be screaming, all right, and using what kind of whatever language that you wish to use. But today we are patient. We understand, that there are so many orders, and again, that's where the improvement in that sector needs to happen, to accommodate the needs of the different kind of stakeholders. So it's a give and take attitude, the way I look at it.
Understand. So maybe you'd allow me to summarize that the dynamics of the stakeholder relationships are going to go through a lot, because no one really wants to go into this bankruptcy situation, but it's difficult, isn't it? Contracts are being breached, deadlines are missed.
Yes, Baraj, I think it's easy to it's easy to have a conversation, easy to write articles, but I think there are a lot of practical issues, and there are situations that whether force majeure needs to be applied and so forth. I think these are situations that I don't think anybody has an answer at this moment, but if cool heads don't prevail, I think if everybody were to follow the letter of the law, and you are an expert in that field, I think we will be in a chaotic situation.
Understand. I think I've thought about this a little bit, and I've been on both sides a bit of the divide. And what may be useful now are some best practices. Aggregating some best practices from the world on how we're doing it, because everybody's in the same position: cash crunch, deadlines missed. And if we hear of someone doing some good models, which are fair to all parties, that would be something I think we all would like to find out more about. So please let us know if you ever come across any.
Yep, will do, sir.
Okay, great. Just picking up a little bit, also on the government, we had a question coming in from TMF, I think. So we all know that the government does not have unlimited funds. They've already put up some numbers which a lot of people I know are questioning. And so let's work through. There is some assumptions on the budget that have run. The oil prices were, I think, pegged at $60 per barrel. They have come crashing down. They are doing stimulus that is fairly strong. We are looking at possible fiscal deficits. And this is also maybe going to affect the currency. Is this likely? What are your thoughts? The whole chain of events.
I mean, it's really, we need to take a position as to whether the oil price will remain at this level, and how long will it remain at this level? Do we expect this to be for 6 months, for a year, or for in perpetuity? I think that will dictate the deficit issues that we are facing. I think we basically need to look at where is, when the honorable finance minister had his speech, and I think he had something on Facebook a couple of days ago. I think when we look at it and listen to his speech, I don't think the idea is for Malaysia to cover its OPEX based on borrowings. All has an important contribution to the economy. But I think if we look at all literature, everybody expects all to hit about 40 by the 35 to 40 by the end of the year. So this deficit, it's going to be short term. It's not going to be permanent. And if we have, and our budgets have been prepared based on 50. So there is a difference. Key question is, how long will it be at this price that we're looking at? It was 50 in January, then 40, 30, and 20 in April. Would it continue to slide? I think these are some of the questions, and I don't think anybody can look at it. The Western world will hit into winter. There will be more consumption of oil. The guys who are storing this will run out of storage space. The guys who are continuing to want to produce will need to stop someday, and there will be an equalization of the price. I think these are the things. I think if we look at the way government is funded, a lot of funds come from the GLCs, and most of these GLCs have sufficient cash on their balance sheets. If you were to look at it, and I'm sure if I were the government, I would definitely go back to them, and if they have cash on the balance sheet, ask for further dividends. That's the way I would look at how they would balance the deficit.
That's very interesting, George. So firstly, I think on the oil and gas, because it plays a part in a lot of studies and a lot of research and a lot of assumptions, it's good that we got a chance to go into it. You were saying that although there is a slide down on the prices, the expectation is it picks up in Q4, when the winter months start coming, and it should come back reasonably strong. That's the expectation. And also this deficit, short term, not long term. And at the same time, as we are facing this oil price thing, you suspect the GLCs will have to dividend out to the government. So it'll be a bit of a double pressure on them as well, right? For at least Petronas.
Yes, I would imagine so. But I mean, to balance the books, I think that's the first. Instead of borrowing money and stretching your balance sheet, I think you will need to go back to the GLCs.
I see. Understand. And so just double checking, this change in price, does it affect a lot of the other, the big assumptions that we've made for the corporate Malaysia? Is it a big one, or even though temporary, is it a big one or not really?
So the benefits will only be seen, once economy opens. All right. The guys who are using, oil today, it's somebody was just sent me a joke and said, toilet paper is more expensive than barrel price of oil today. So if you look at it, I think when economies open and you start consuming, it's at cheaper rates. So their margins will go up, right? As long as they get their disruption sorted out and business back to. So it's a balance. Somebody's going to lose, although we say that with oil price coming down, government will lose from the GST and will lose from the SST and the income tax from companies like Petronas, but somebody else is going to make more money because I have now cheaper fuel to consume.
Understand. So it balances it out because someone else then benefits from that lower price, and it factors into their supply chain and all that kind of stuff.
Yep.
Right. That's great. Okay, so moving away a little bit from the government, perhaps. Can I just check with you? You hinted that certain GLCs will be affected with the contribution of dividend. Is there anyone else in Bursa that you've given a sectoral analysis as well as to which industries might be doing better? Can you share with us any more potential ramifications we can expect? You were saying possible consolidations. You're looking at a lot of companies resizing and so on. What else is happening with corporate Malaysia? in the
I,
next, now and future?
I mean, there have been, some initial discussions before COVID-19 even came about. I think people were already looking at how do they future proof their business. But with COVID-19, I think they would have no choice but to expedite some of these plans and bring forward to today. I don't think if the economy is going to be very domestic focused for the next 6 months, I don't think the current infrastructure can handle. So the companies that have strong cash on the balance sheet will end up acquiring the guys who may have a good business but cannot sustain. And that would be what we expect to see, and that's what, as an M&A practitioner, I think that's what I'm looking at, the opportunities that could exist, and it could exist from in any sector. It need not be specific to only the oil and gas sector or the tourism sector. I think it will be across, because companies have different balance sheets, have different debt levels, and have different business models.
Understand. So that's great. So there could potentially be a lot of corporate activity coming up where people try to take advantage of their balance sheets and and what's happening in the market. And you think this would all start happening once the MCO gets lifted? Is that how you see it happening?
Yeah.
Or
So
conversations have started?
yeah, well, right. So the conversations that we are currently having with our clients are now, next, and beyond. I think the now is managing the MCO situation. What is next and what is beyond? I don't think people will straight away jump into doing M&A in the next, after MCO is lifted, but it has to come. So I would look at it in its later part of this year, early next year is when some of this activity will happen. First is really getting your house in order, and then, as a somebody who wants to sell a business, I would expect to get decent valuation. If I don't get my house in order, my valuation is going to be very depressed. So like any normal shareholder, I would like to create some value and then hopefully realize some value through an M&A.
Understand. So we agree. You need to get your house in order before any of these external, transactions and valuations will happen. And part of getting your house in order, and also one of the words you used earlier as one of the priorities, is the supply chain.
Yep.
So supply chain is one of the key things we need to sort out, along with people and stock and liquidity and so on. So product, people, and money, of course. In the supply chain situation, we had a question from Patrick Helson. Patrick was saying that, do you foresee, or we should move away from global supply chains, for example, manufacturing in China that is then exported into Malaysia, and towards structuring an economy that either has buffer stock of key resources or becoming more self-sufficient, more local capacity to manufacture? Is that on the cards at the moment?
Yes, I think when the China situation happened, before the rest of the world was hit, I think, just to share with you, I am working with a client who is in the personal care space, and the nozzle for that shampoo bottle, for instance, comes from China. Everything else is done here in Malaysia, and they had supplies to meet, and the nozzles couldn't reach here in Malaysia, and they had to look for alternative. So that disrupted the business. So although it could be a small component of the thing, it affected. So I think before this MCO and global thing hit, people were already looking at moving some of the manufacturing away from China into countries that to prevent this risk from occurring again, to look at places like Malaysia, Vietnam, Thailand, and so forth. So there were already inquiries, and we had already clients, from overseas contacting us and looking at uh, asking us questions about the investment climate and so forth. So I would believe that that will definitely happen. I don't think anybody would want to hedge on a specific country to do the supply, and as such, if something like this happens, not in 100 years, but happens in a couple of years, nobody can afford to go through this process again.
Understand. So what you're saying is the exercise had already started. The pinch was already felt in January. Maybe some are able to cover it, but some are still having to find their way through, I assume.
Yep.
I personally know of a few friends. They were trying to do the mask production, and the machine was easy to get, but the supply for the mask, the cloth, non-woven
Yes.
cloth, that might be a limitation. So basically, now what you're saying is, if I was running a manufacturing, I would have to source out every single part of the product, so I don't have any bottlenecks. And
Yep.
this might be an opportunity, perhaps, you think, for some of us to fill the gap.
Yes, I would think that if you look at our car distributors in Malaysia and how they started the vendor programs, and we had small companies being incorporated to start supplying various parts and components to the automotive industry, for instance. So I believe that will happen here in Malaysia. Key question is the domestic economy big enough to be able to support them, or it will end up that yes, we will do this for the local businesses, and whether we look at exporting it eventually. So I would see some movement. Again, here is a balance of cost and efficiency and so forth. Everybody went to China because it was cheap, quick, and you could get it, like immediately. But a lot of supplies have been disrupted, and I think people are rethinking about the supply chain.
Understand. So not an easy one there. Yeah. Can I sort of shift the focus a little bit, George? And that is to one of the key players in this whole game is the banks, aren't they? If I wanted to set up manufacturing, I need to get money, cash flow. I need to do all these things because I need the supply chain, and I can't seem to get the orders. So the banks are going to play a big role, and you've interacted with them a lot. The history of it, of course, was banking was very big into property and a few other areas. What do you think is going to happen with them now, or in the medium term, perhaps?
I think I would imagine that the banks are flushed with cash, but how do you now distribute this cash to a recipient that will not go bust? I think that's the issue. So it's a balance between distributing cash and balance between recovering the cash that they have lent out. And I'm sure that with banks are always willing to lend. Corporate Malaysia that has a good business plan, has solid situation. I don't think there has been reluctance, but I think the change will happen is that nobody's going to lend you a vast amount of money to buy a huge piece of land and put a multi-story building. I think that will be a relook, but I think banks will be willing to lend companies that are moving into the new technology, AI, and so forth. I think that improves efficiency, improves operations, and eventually productivity.
Interesting, very interesting. So what you're saying is your suspicion is the banks would have a position on which industries are probably going to do better than not, and some who may not do so well, and they will start cutting it off. So because there was a question from TMF who was saying that there was some excess, maybe there was maybe there was some kind of speculative lending in equity, the property segment of the economy before, and would it be time to clean up? Is it time to clean up these kind of things? So you would say this naturally will happen. Is that what you think?
It will happen, but it cannot happen immediately. I think any drastic measure on any sector will have a cascading effect on the economy. So I think that will need to be relooked at, whether it's property or any other sector. So just like I have done an analysis and said that I think these are the good sectors, these are sectors that are not so good, these are sectors that work needs to be done. I'm sure the banks have, more than capable and competent bunch of people in the organization re-looking and having the numbers to back their statistics as to where the risks are and the risk profiles that they have on an industry basis. They will be doing that assessment, and again here is if there is no tussle and everybody's looking after to make sure that the interest of the country is there, then there will be a gradual shift from lending.
Understand. So we can't do any drastic steps. Everything has to be a bit measured. But the banks will be looking at these things and look at what's right. But this issue is central, isn't it? You've raised it as well. Liquidity is one of the key things for all of corporate Malaysia. And what can we do about liquidity? It seems, is it a zero-sum game? Is there potential for liquidity elsewhere? What about alternative funding? What can corporate Malaysia do? Because there is a lot to be done. How would you view it?
Yes. So I mean, we traditionally Malaysians have always, or corporate Malaysia has always focused on two kinds of funds. Either they go back and get money from their shareholders, or they go to the bank and borrow money. But there are a vast amount of funds outside, within Malaysia and outside Malaysia, either through the private equity or the venture guys. Uh, and these are guys that are cash rich, maybe may need to be we may need to look at them to provide some form of funding, whether it's equity, whether it's a hybrid, but there is source of funds. I think my colleagues in China said that the minute they could go back to work, uh, although the global funds didn't come in immediately, but domestic funds, the PE guys there were super active, approaching the corporates there and seeing how could they help. And I think that position will prevail here in Malaysia. We are getting inquiries from some of the funds in Singapore, as to is there any company that wants to privatize? Is there any company that needs new equity? So there is funds. Key question is at what price? And everything that we get at what price and at what expense. I may lose control, and there is this balance that needs to be maintained.
Interesting. So you expect a larger role coming up from the PE venture fund sectors. They might be able to play a role. They're already actively scouting for good deals, perhaps.
Yep, they are.
Good.
Well, right. Yes.
We're getting a question from Ian Chi, George. He says, what's your view on the liquidity ratio requirements for banks? These were set fairly conservatively by Bank Negara, perhaps. Is there a way to relax that to really move the economy a little bit?
It's a tough question. All right, I think it's a question of following the rest of the world and making sure we are in line, and a balance between that and the funds required for the economy. So I mean it's I'm not a banking expert, all right. So it'll be a very tough question. But if there is funds required, maybe that's something that may need to be looked at. But I believe that there are sufficient funds in the banks.
I think that was really lovely to hear, actually. Banks have lots of money, guys. Don't worry about it. That's good. Okay, taking it a little bit more personal, George. Only to the extent to say, if you had a choice, what are the two or three proposals that you would like to see, either from the government or from industry or the general public or the average person, in this time? How would we move the needle with corporate Malaysia? What would you like to see done, or what would you like to see not done? What would your thoughts be, please?
I mean, firstly, I think it is fairly critical that corporate Malaysia really needs to embrace the digital world, the IT space, and a lot of this stuff. I don't think you have time. We have been put into a position, and we need to react and also be proactive. I think a lot of people that we've spoken to, they have said that, we will do this. This is somewhere in 5 years down the road. But I don't think we can wait for 5 years. I think we need to relook at the model. I think insofar as the government is concerned, they have done. It's left to debate whether they have done enough and all those things. I think depending on whose perspective we are looking at. But I think there will be, as MCO gets lifted and as people start getting into rebuilding their businesses, there will be issues. I think the key question is that uh, I would like to see the government open, and to be able to understand the issues and try to look at some of the resolutions. I think, uh, you know, in the previous Asian financial crisis, the government had the Danahata model to resolve some of the bad loans, for instance, and things like this may need to come in, but at a different model. It could be sector specific. If we think that banks are going to exit from a sector, but we cannot allow that entities to collapse. We cannot allow the sector to collapse. So whether an SPV needs to be formed, these are some of the things, and those need to be driven by the government. It cannot be driven by individuals like you and me and the corporates.
Understand. So just to repeat that, you would say that the priority you'd like to see more is adoption of the digital tools, the IT world, and that maybe at all layers of corporate Malaysia. And you seem to suggest that there is interest for that. Banks might be willing to do these kind of activities. The second one would be a more open government, a government that you can really engage on the issues, whether by sector and so on and so forth. Is that right?
Yep.
And I had this. It's a cheeky political point. It was made to me by cheeky. Yeah, it was from an alumni who's with the Khazanah Research Institute, and he was saying, one of the problems maybe we might have is that the government, some solutions which need parliamentary approval may not get done, and this is because the government may try to avoid parliament because of its some concerns on its legitimacy. Has anything come across your table where government could have done more, but is perhaps hampered? Is there anything like that?
I mean, from the time this new government has come in, I think it's got its hands full.
Yeah.
And I think the top agenda really is to save lives, and really is to get the PPE out to the people to get the stimulus package. So I think I see some of these things. I don't think they are stopped because I need parliamentary approval. That's my take. I'm not an expert in politics, but I think have I seen this? I mean, I read in the papers today about a court of appeal, looking at one of the cases. I think it's starting to move. I don't think there's a standstill. Affected people coming in. Whether that's right or wrong, whether it's within the law, I have no idea. I'm not an expert on that subject matter, but
Sure.
I think there are debates,
Sure.
but I don't think it's driven by the fact that I'm not going to help recover this situation that we are in because I need somebody's approval. I don't have that feeling, but I could be right or I could be wrong.
Understand. Very good. Another question we got from the floor, George, is from Nanda Menon, and it's to do with the residential property market. Residential property market. There's a report last week from REDA that we might be seeing a turnaround improvement. And of course, we understand from an individual's perspective, property is one of their biggest assets. Is this okay? Because it's not fair to ask George on economics type questions, but please.
And property.
Share. Yeah, and property. No. Okay.
Yeah. So I mean, this is really a tough question, right? It's a tough question because really, what is going to happen to people, and are we going to are we going to stay in the Bangsas and Damansara Heights and and Manda Utama kind of places, or are we going to move outside of KL? And if working from home really becomes the cultural norm, why would you want to pay, $5-6 million for a house in this area? So when you look at residential, I'm sure, I think people will also be concerned with we've got a lot of clusters of high rise buildings, and if a couple of people fall sick there, the whole high rise building gets locked down. So you yourself will rethink about, okay, is this what I wanted? This is where I want to live in, because it was convenient before. It's near my office space. It's near my kids' school, and so forth. So it's going to be driven by a lot of factors, and the demand I would look at on a personal view is that yes, people would want to move to a place. There could be an uptake on residential, but in selected areas, and there is convenience to what you want to do.
Understand. So very good. But I think earlier you spoke to me about this. You were saying that the commercial property market may not be so optimistic. Is that right?
Yes, I think when you look at commercial, especially retail, uh, you know, uh, this social distancing, the fact that when people get used to online purchasing, I think we had the culture of having to look and feel and try something out before we buy. And even if you look at some of the big, I was just having a discussion with one of my, couple of my colleagues yesterday about cars. We would want to take a car out for test drive, but if you look at some of the technology and stuff like this, you could purchase a car without. But would we have that mindset change? And that's an example of how commercial buildings will get affected. Now, if everybody's going to work from home, would you need big offices in the heart of the city? I think those are key questions. Do we have an answer? I'm sure when an organization like ours reopens our door, we'll have team A, team B, and I'm sure even when you come back with the team A, team B structure, people come back to us. Boss, is it okay for me to work from home? I don't think we're going to say yes. No, you need to come to work. So it when this becomes norm, then really we then look at, do we really need to occupy so much of space? And that would mean would have an effect on commercial.
Absolutely. I can confirm that my ex firm in Hong Kong, when rentals for office rentals, one of the big major expenses of the firm, they are absolutely considering 3 or 4 day weeks. It's just not critical for business function to be there all the time, and therefore they're repositioning. So yeah, it is an international trend perhaps.
Yep.
Um, yeah. I was going to ask you a little bit about how EY was actually handling it, if you didn't mind sharing that. Is there any concrete steps
Handling what?
that,
Sorry.
yeah, any best practices to share perhaps as to how they're managing the current situation and probably the post MCO? Anything you can say that these are things we are looking at to manage the issues that we are facing?
I think like every other organization, I think we have basically uh, adjusted our lives and and better use and leverage of technology. We have a lot of platforms, of course, with issues on whether secure, not secured, and so forth. I mean, we are lucky that we have an organization as big as EY, and we have secure platforms available for us to have conversations. So I think when we looked at it, I think the first thing that we wanted to do was to make sure we can leverage on technology to be able to make sure everybody is in contact with one another. I don't think we wanted to have this MCO and everybody were to operate as islands in different locations. Has work stopped? No, work has not stopped. We continue to support our clients. We continue to support the business community in various ways that we can. We're supporting the government with some initiatives to, insofar as monitoring and the stimulus package and distributions of PPE and so forth. So I mean, those are some of the things that we are doing. And I think like everybody else, I think we are an organization that we have close to 4,000 over people. Their lives are very important, right? So I think that's key to us, and making sure everybody's safe. And we have people of very very young age to all these like me. So we need to balance it.
Understand. Perfect. I'm going to squeeze in a few more questions. We only got 3 minutes left. One question is actually from Ian Chi. I think it's lending itself to what you said earlier. His specific question is acquisition of virtual banks by traditional commercial banks. Do you expect to see more of that? But that's a specific question. I thought you would say that brick and mortar will be buying online, or that kind of acquisition. This is very specific.
Yeah, so Balraj, I think if you look at it, I think Bank Negara is pushing for the digital banks and stuff like this. I think we will see more of this coming out, but it's just not being able to go to the internet and do things. I think the supply chain to support those digital banks. I think the partners that need to work together. I would see more of that coming in. One of my clients was telling me that today people will still go to, in the small towns, people will still go to the branch to renew the FDs. I think there'll be less and less of that. I think such simple task will happen, and I will see that shift will happen for certain.
Absolutely. I've confirmed this with another bank as well, that a lot of people who didn't adopt these internet tools, for banking transactions, they're losing out. They can't seem to do a lot. They're struggling because, bank branches are difficult, and some of the places they are not fully staffed. So there is a larger concentration of people going online, which I think will just strengthen your premise that e-commerce in general will get a boost from all this, as people need to do their necessary essential activity online.
Yep, I totally agree, Balraj.
Okay, great. Last one, a little bit quick dotty one from Kam Soon Cheng. Is it really possible to buy things online? Property, for example. So I think this is a consumer behavior question. Will we actually really shift to buying things online? I think maybe I can jump in here. Overseas, it happened. Malaysia was a bit slower. We think they'll be growing rather than reducing at the moment. Is that a fair summary?
I totally agree with you. I myself have adopted to e-commerce. I think I'm the brick and mortar kind of guy. So I would see the change happen. There's no more. I need to look. I need to feel. I need to look at everything. And I think that's where the world is going to change.
Okay, great. George, you have been a fantastic host. Thank you so much for hosting us here today on behalf of the Oxbridge Association. It's been amazing for me. Please allow me to pass it back to the president, Emma. Thank you so much again.
Yeah. Thank you, Balraj. Yeah, thank you, George. That was great. And thank you very much. We were very game. We certainly put you on the spot with a few questions there, and you were very frank and honest and informative. Interesting to note yet again the world of work, future way that the workplace is going to change came up again. So we're going to have a great session with Chin Han Lin from Towers Watson coming up. Also coming up, Dastri Anwar, British Council, British High Commission, and a talk on climate change. So a lot of those things you guys talked about there are going to be discussed in later ones. So George, I hope you join us for future ones, and we hope we get some of your questions coming up from the other side. So thank you so much, George Koshi, for coming. We're going to share the EY reports that you guys have been talking about. Thank you, Balraj. Thank you also to Dhruva, who I know you guys were talking earlier. Thank you, as ever, to Shom, the man in the control room who tells us all what to do on time. Thank you, Shom. Thank you, George. That was great.
Thank you very much. Thank you very much for inviting me.
Good evening.
Bye, guys.
Bye.
Oh, by the way,
Bye.
don't forget, 8 p.m. Wednesday, we've got Dr. Azli Rahman, New York time. I apologize for the 8 p.m., but it's because he's teaching in New York, so we're trying to fit it in before his full days of lessons. So 8 p.m. Wednesday, Dr. Azli Rahman's going to be talking about education. Just had to get that one in. Okay. Thank you again, George
Thank
and
you.
Balraj. Bye,
Bye.
guys.